Here is a summary of JetBlue's Q1 2026 earnings call. Introduction. The call began with an introduction and a reminder about forward-looking statements and non-GAAP measures. CEO's remarks. Joanna Garrity challenges. The quarter was impacted by winter storms and TSA disruptions, alongside the significant headwind of Middle East conflict leading to elevated fuel prices. Guidance suspension. Due to sharp increases and expected elevated fuel prices, JetBlue is suspending its prior full-year guidance, emphasizing this is due to external factors, not a change in the jet-forward strategy. Mitigation strategies. JetBlue is implementing three primary levers to offset fuel costs. 1. Adjusting fares. Fares have been adjusted to better align with input costs. 2. Moderating capacity. Capacity is being reduced, targeting off-peak and shoulder periods, with plans to cut 1–2% in Q2 and 2–3% in the second half. 3. Cost savings. Additional cost-saving opportunities are being pursued, including reducing controllable spending and hiring. Fuel recapture. JetBlue expects 30–40% fuel recapture in Q2 and aims for 100% by early 2027. Ancillary fees. Targeted updates to ancillary fees, like checked bags, are being made to cover costs while keeping base fares competitive. Jet forward strategy. The jet forward strategy remains on track, with projected incremental EBIT of $310 million in 2026 and $850 million to $950 million in 2027. Transformational initiatives like domestic first class and the Blue Sky collaboration are expected to drive significant value. Outlook. Demand remains strong, and the company is confident in its strategy and team to navigate the challenging sector. An updated full-year view will be provided as fuel price visibility improves. President's remarks. Marty St. George RSM performance. Q1 RSM was strong at plus 6.5%, exceeding guidance. This was influenced by airspace closures, winter storms, demand strength, and jet forward initiatives. Demand trends. Demand strengthened through the quarter and carried into Q2, with improvements across the booking curve and in both peak and trough periods. Premium demand continues to outperform core. Loyalty program. A historic quarter for the loyalty program, with 19% year-over-year growth in cash remuneration driven by strong JetBlue card spend and acquisitions. New initiatives, like using points for ancillary purchases and family tiles, are showing positive customer response. Blue House. The Blue House at JFK is performing well, exceeding NPS expectations and driving premium credit card signups. The Boston Lounge opening is anticipated to be a catalyst for premium growth. Fort Lauderdale. Strong customer response to growth in Fort Lauderdale, with RSM growth of 5% despite significant capacity expansion. Further service additions are planned. The rebanking of operations will enhance connectivity. Blue Sky. The launch of interline flight sales with United is a milestone, with reciprocal loyalty benefits and sales of rental cars expected soon. Q2 outlook. Expects continued strong RSM growth of 7–11% on 1.5–4.5% capacity growth, supported by sustained demand and jet forward progress. Approximately two-thirds of Q2 revenue is already booked. CFO's remarks. Ursula Hurley financial priorities. Responding quickly to the dynamic environment and prioritizing financial objectives, including capacity adjustments and investments in Fort Lauderdale. RSM versus CSM ex-fuel. A positive spread between RSM and CSM ex-fuel is expected in Q2, reflecting strong demand, cost discipline, and jet forward momentum. CSM ex-fuel. Q1 CSM ex-fuel was up 6.6%, influenced by operational disruptions. Excluding these, it would have been 2.5%. Q2 CSM ex-fuel is expected to increase by 3–5% year-over-year, moderating in the second half. Fuel prices. Average fuel price in Q1 was $2.96. Q2 fuel price is expected between $4.13 to $4.28, representing a 75% year-over-year increase. Each 10-cent fuel price change impacts annual expense by about $85 million. Fuel efficiency. 30% of Q2 capacity is powered by new engine technology, contributing to a targeted 5% fuel efficiency improvement. Cost reductions. Incremental cost reductions beyond capacity cuts are being implemented, including reducing OPEX and CAPEX and slowing hiring. Structural cost initiatives under JetForward are also progressing. Fleet and CAPEX. Q1 capital expenditures were $141 million, lower than planned due to delivery timing shifts. Approximately $275 million is expected in Q2 and $800 million for 2026. Aircraft deliveries are now expected at 12 for the year, down from 14. CAPEX is expected to remain below $1 billion annually through 2030. Liquidity and balance sheet. JetBlue ended Q1 with $2.4 billion of liquidity, 26% of trailing 12-month revenue, above its 17 to 20% target. A $500 million secured debt raise was completed. The company repaid the remaining $325 million of its 2021 convertible notes. Unencumbered asset base remains over $6 billion. Key financial metrics and forecasts. Revenue. Not explicitly stated as a total dollar figure for Q1, but RASM, revenue per available seat mile, was a key focus. Q1 RASM, plus 6.5% Q2 RASM forecast, 7% to 11% year-over-year profit. The company suspended full-year guidance due to external factors, indicating a challenging path to near-term profitability. Gross margin. Not explicitly detailed, but the RASM versus CSM ex-fuel spread indicates pressure and a focus on managing unit economics. Management's forecasts. Q2 RASM, 7% to 11% Q2 capacity, 1.5% to 4.5% Q2 CSM ex-fuel, 3% to 5% second half capacity, 2 to 3% reduction targeted. Full-year JetForward EBIT, $310 million, 2026, $850 million to $950 million, 2027. Fuel recapture, 30 to 40% in Q2, 100% by early 2027. Full-year guidance suspended, due to fuel price volatility. Significant risk factors. Fuel price volatility, the primary risk, driven by geopolitical events, significantly impacting operating costs. Macroeconomic environment, general economic conditions, and their impact on travel demand. Operational disruptions. Winter storms and TSA issues can impact operations and costs. Competitive landscape, imbalance of scale compared to larger competitors. Highlights. Strong Q1 RASM performance. Robust demand across the booking curve. Successful growth in Fort Lauderdale. Positive momentum in the loyalty program and credit card acquisitions. Progress on JetForward initiatives. Strong liquidity position. Lowlights. Suspension of full-year guidance due to fuel price volatility. Significant impact of elevated fuel costs on profitability. Inability to fully recapture Q1 fuel cost increases due to pre-booked fares. Concerns about scale relative to larger competitors. Most important statements. CEO, Joanna Garrity, suspending. Our full-year guidance reflects external factors alone, and not a change in the strong progress of JetForward. Demand remains strong. This backdrop allows us to recover some of the increase in fuel costs. We expect 30% to 40% fuel recapture in the second quarter and plan to achieve 100% recapture by early 2027. We have taken immediate action to offset fuel costs with our ultimate focus on minimizing the financial impact and preserving our liquidity position. CFO Ursula Hurley. Our underlying business is clearly improving, with a roughly 5-point spread between RASM and CSM ex-fuel expected at the midpoint of our guidance ranges this quarter. We haven't seen a gap like this in years. We ended the quarter with $2.4 billion of liquidity, or 26% of trailing 12-month revenue, above our liquidity target of 17% to 20%. Our priority remains maintaining a strong liquidity position and ensuring JetForward has the runway to perform.